14% distressing?
Well, I guess it is the initial offer. You know, as these things go, you know, they obviously try and go in high and then try and negotiate it lower. You know, I don't think there's reason for major panic at this stage. You know, realistically, I think the market is looking for that wage negotiations to settle closer to 9.5%, even 10% in a worst case scenario. And I think it's you know, it's well supported, given, you know, CPI at the moment running around about 4.2%. Last year we've seen it averaging around about 4.3%, and it is a substantial premium above that.
And it's not just the basic increase that we're looking at, because they're also asking for larger housing allowances and larger minimum wages. So according to Elize Strydom at the Chamber of Mines, this actually takes it to a 25% increase. And with mining companies, and particularly gold companies, very much influenced by what the rand's doing, what gold's doing, this could come as a bit of a shocker to them.
Absolutely. You know, I think the employees are well aware of what's going on in the company's finances. And I think when you see these very good margins, or relative very good margins, relative to where we've seen them in the last couple of years, everyone wants to have a piece of the pie. And I think it brings in the debate where we've seen a lot of people are arguing the big disparity between your executive remuneration and the ground people on the ground. And I guess a lot of the negotiation also is driven from that perspective, where they feel they want to share more in terms of the upside. Obviously, that in itself creates more risk. You know, you can talk about linked sort of remuneration structures, but what happens when the metal prices goes the other way? You got to take food of these people's tables, literally. So I think, and in essence, you know, like these things normally go, there is upward pressure on it. I think. Current mining inflation is around about 8.5%. If you know, labour is one of the biggest components, 60+% on most mines. And if you're going to see these things settling higher, you are likely to see pressure on the cost line with the pressure we've already seen from electricity and other costs.
But you said gold miners and miners sitting on larger margins at this stage, but are they sustainable? Because we know what's been driving those margins at this point. We also know that South African gold producers are very high cost producers, and we're facing higher electricity tariffs and all sorts of other input costs also going up.
Yeah, there's a lot of question marks around the sustainability, and it's not just within the precious metal sector, gold, platinum, which maybe you could argue hasn't performed to such an extent like we've seen copper, iron ore, coal, and some of the other base and bulk commodities as done. You know, across the level, especially on gold, I think, and these companies that have been part of this negotiation is definitely enjoying a very high metal price. I think one would argue, and it is probably at this stage opportunity for them to actually reward shareholders and to try and bank a lot of those profits for the tougher years that could be around the corner. The problem with sustainability, I guess, is when you see your underlying workforce demanding more, and they're putting major pressure, like we've seen now on Lonmin as well, that's been in the news, of major strikes happening in that area. It can actually cripple a company and be negative, very negative.
Of course, here we're talking about the gold and the coal sectors. That's where the wage demand of 14% is coming through. How about some of the other sectors? Have we started to see wage demands coming through in those sectors as well?
I think you know, some of the platinum companies are sort of getting into negotiations. Some of them going more towards Q3 of this year, and I think the general trend is around that 10% mark. You know, maybe sub 10%. You know, I think, you know, inflation for these guys are realistically going to be CPI plus 2-3%, even more, 4%, and I think it's something they gotta live with. I guess going forward, it's something that you know, I think the industry got to look at in terms of competitiveness from a global perspective. You know, it's nice in the booming days and the booming years when it's going well, but when things are going tougher, you know, and they are pressed for these type of increases, the last resort that these companies have is to lay people down. And, you know, I think ultimately that is, for the broader economy, that's the last thing that we really want.
Do you think a 10% increase, if that's where they manage to settle these negotiations, would be palatable for mining companies and would keep them competitive?
Yeah, I think so. You know, it's not substantially higher than last year, as I said, around about 8 So let's call it 8.5. So let's call it 1% higher. We've seen, obviously, you know, a lot of the as we said, the metal prices have performed very well, some better than others. But I think that won't be a major issue. I think it's probably more concern if that trend's just going to continue year in, year out. You know, it's got to come to a point where it's closer linked to the top line performance.
Where do you see metal prices going from here? Because we've had quite a bit of volatility for the month of May, big severe pullbacks, particularly in these industrial metals, so gold holding up at this stage. We had Goldman Sachs this morning coming out and saying it was bullish on commodities. It sees demand continue to come through from China for copper. It sees oil prices going up. Where do you see it? Do you think we are going to see a recovery in prices?
I think it's a year of macro risk, definitely. Talking about China, we've seen, you know, the latest numbers. We've seen strong imports and investment growth. We've seen actually weak exports and industrial production numbers. We've seen the purchase manager index printing lower for the last couple of months. But I think it's all in relation to the interest rate environment and they trying to cool things down. We've definitely seen tighter credit, tighter money supply. You know, and I guess the expectation this year is for inflation to peak around about middle 2011 in China as the food base effect sort of comes to a peak and sort of roll out of that. So I don't think there's been major talk of late of you know, is there a hard landing in China coming? You know, there's talk of the property market that has cooled down. But I think in general, you are seeing a moderate slowdown in economic growth on a global level, which is normal, I think, at this stage, given the inflation fears that are around, especially in those countries. And I think going forward, demand will still be solid, although at a lower growth rate that we've seen last year, but it will be moderate. And you know, I think it's still well supported from a macro perspective.
There's support for those commodity prices.